Hi everyone and welcome to Boothy Bites and hello to you Boothy, how are you?
Hey there, Jackie. How you doing? All right?
Yeah, good, thank you. Just before we clicked record, we were talking about Cyclone Alfred, which is heading my way because I'm in Brisbane. So we're going to get this filmed, get it out to you guys, and then I'm going to bunker down.
Yeah, so Jackie's looking glam on the top, but she's got her Wellington boots below and her Mac and brolly ready. That's it. So anyway, hopefully it breezes by and it's a bit of a non-event. But if not, bunker down and stay safe, yeah?
That's it. Fingers crossed. So anyway, the RBA, hey? So as predicted and expected, last month we did get that long-awaited rate cut. So Boothie, what are your predictions for the coming months now?
Yeah, how exciting. I mean, look, it was, I suppose, the drum roll before the actual, the main event was bigger, I think. So, everyone was quite excited in December and January. And then it happened in February and it was like well, there we go. So it's done. But, I mean, look, the cool thing is that we, number one, from a sense check, we predicted right. Number two, that the inflation figures are in line with where the Reserve Bank wanted them to be, which is good. So that sort of removes a little bit of that problem that we've seen over the last sort of 12, 18 months and why interest rates have been so high. So, so it's a great outcome. The sentiment in the markets, to be honest, is this rate cut is not the first of many. It's just, I suppose, just to take a little bit of the tension out of the market, give a little bit back to consumers, particularly borrowers like our home loan borrowers. And really then it's a sort of wait and see. I read the Reserve Bank report and the comments there. There is a little bit of confusion in the market, to be honest. I was in America, right? And I don't want to big nose it, but I was in Washington before the Trump inauguration. And who would have thought it would be such a whirlwind of a month with what's happening over there? But I suppose that the main news from an economic perspective is that, the world, the way it's traded before, and Australia is a big exporter of its commodities, may be changing, so these tariffs that the US may be looking at to impose on its trading partners will have an impact on Australia, maybe not directly with a tariff to Australia, but certainly economies like China, where we do export a lot of commodities to, if they're having tariffs on their completed exported goods, that will be that's a bit of a cloud for us. So again, with all this uncertainty, the economic outlook is a bit undefined, and as such, what will the Reserve Bank need to do to sort of keep stability in the market? And the other thing as well, we're running into the federal election, which is potentially in July, I think it is. And again, with that, there's a lot of talk and rhetoric and actually gifts to consumers as well. So although inflation is contained, some of these gifts are a bit of a concern for the Reserve Bank because again it creates a bit more spending and a bit more inflation on the back of that. So sadly, don't expect a rate cut in April Fool's Day, as crazy as it is. But I do think by the end of the year we'll start to see a refocus on growth again for the Australian economy. So that means the Reserve Bank will have to, I believe, start to cut the interest rates to stimulate activity in different areas of the economy. The housing market is not super hot right now. I mean, there's certainly less properties on the market in autumn than there were sort of pre-spring, and that it's a slower market. We've still got the hotspots in Perth, Adelaide and Brisbane, Queensland. So those property markets are pretty hot, but certainly Sydney markets and Melbourne markets have been quite slow over the last over the summer period. So again, I think the Reserve Bank will have the ability to decrease interest rates. There you go. That's my long-winded saying, don't expect one on April Fool's Day.
Love it. It's so comprehensive. So what's the latest with the lender interest rates? Are we seeing that rate cut being passed down to the bank's customers now?
Yeah, so we are. So in the main, all the majors have come out quite quickly and reduced their variable rates by the 25 basis points that the RBA cut, which is wonderful. So, we are seeing that variable rate right now as low as 5.69 with some of our preferred lenders. So yeah, do reach out. If you haven't had a message from your lender to say the interest rates have been cut, come through to us. We'll do a sense check and a rate check for you and just make sure you are on track. But certainly, if you're not you don't have a 5 in front of your interest rate right now for your own occupier property, you should be speaking to your broker. I think that's the first thing. So, lenders we're using right now, MoveBank have been really good for us. So they've got some really cheap rates and some cheap fixed rates. So they've got a 3-year fixed at 5.69 and there's even a five-year fix there at 5.89. Now, I'm not suggesting to fix, but certainly if you want to sort of have some consistency with cash flow, you're a little bit uncertain about where interest rates may be going, and you just want a bit of a breather because the interest rates are lower than the variable rate, well then take advantage of the fixed rates. But I think we'll see in the coming months reduced fixed rates. The variable rate now, like I said before, 5% is sort of where 5.69% is where the best variable rate is right now. So anyway, yeah, jump on it.
Jump on it. Now, can you talk us through a few scenarios?
Yeah, so it's cool. So I was talking to, anyway, there's two. So I was talking to our CBA business development manager yesterday. She's lovely, Angela, and she was talking through some of the changes which they've got in their credit policy. So one of those changes is how we're able to utilize HEX, or the borrowing that young people use to go to university in particular. Yeah. Now, traditionally, what we've done is basically we've taken those repayments, and as their income increases, we've taken those lumpy repayments as part of their expenses, and that has reduced affordability. So what the lenders are doing now is that they're looking to sort of extend the repayment term of the HEX, make it less imposing in expenses, and therefore it does allow borrowers with HEX to borrow a little bit more, which is, it's sensible. So that's a good policy. And the second policy is, which is really sort of, I think is really great. We've got a lot of problems right now with access to affordable housing, and people are no longer sort of reverting to the traditional sort of house and land build, or that build, where you go out, you buy, you go get a builder, they build the bricks, mortar, and over time in sort of 7 stages or 8 stages they build that house. A lot of the development in building these days is all around quick builds, and almost they come sort of pre-packed, like an Aldi pack to build a house. In the old days, because I'm an old fella, I called them demountables, but I think they're called sort of like portable homes, or I suppose that sort of granny flat thing where you kind of just pop them up. But that's always been difficult to lend against because, one, they're expensive, but two, because we're not sort of incrementally paying for them, the banks have been reluctant to have a credit policy to do those types of builds with those types of homes. However, CBA, again, they've got a niche policy which they're just going to launch shortly, which is supporting that sort of demountable style home, which is great. So watch this space. But again, look, if you're looking to buy something a bit different and a bit bespoke, it allows you access to borrow to do this, which is really cool too. So there you go, 2 little specials on offer right now.
Yeah, awesome. Now, to wrap us up, can you tell us what's the latest at Lydian HQ? Any cyclones down there? Cyclone Boothy?
No. So I think we're coming into autumn now. So I think Lydian has grown. So this year we came to market with Lydian 2.0, and we have more brokers, we've got more partners, and I think one of the things that Andrew and I have been looking at is diversification of service. So in January we welcomed a chap called Mark Lenane, who's going to roll out some more formal sort of asset finance where people can borrow money for trucks, caravans, utes, that kind of thing, which supports some of our clients' needs, which is great. And then we go to market in March with our new Lydian Private. So what does that mean? Well, we've got a chap going to head that up called Sal. He comes with many years working in private banking institutions in Australia. He's got a lot of private banking clients himself, but again, it fits with a certain demographic of our high net wealth individuals and our family offices, which Lydian is supporting too. Many of those clients benefit from having a private banking relationship with a lender, and also they require those niche policies that the private banking offices can provide. So again, we've got a specialist on the team who's going to support those clients, and we're really excited to sort of roll Sal and his specialisation out over the coming months too. So that's us. And then lastly, we've got Lydian has got its first AI bot launched. Now, I think we've got to call it a name because, I don't know whether it's a he or she. I'm just going to call it a she, right? So she's been built with lots of care and attention from our mortgage broking assistant. She's going to be doing data entry, file hygiene for the team. And she's part of the Lydian Mufasas. So I don't know whether we call her a cub or what, but we've got to find a Lion King name for her. But anyway, she'll be doing a lot of work for the mortgage broking assistants. And what that means is, because this little bot is going to be doing the things that they really don't like doing, it just means they'll be able to do more higher skilled and more technical things like sort of some credit work, serviceability work for the brokers and things. So there you go. So we've got our little bot, and we'll find a name for her next month.
How good! As long as she's not hosting Boothy Bites or just Jackie, then I'm happy.
Nothing quite as advanced yet, but over time, maybe, I don't know what your resume is like.
Who knows with AI and the way it's moving. Anyway, Boothy, thank you so much for your time. Thanks for watching, everyone, and I guess we'll see everyone next month in April. Wow, we are zooming through 2025, aren't we?
See you later, guys. Thank you, Jackie. Ciao, ciao. Stay safe, yeah?
See ya. Bye.